Welcome to Tech Talk Tuesday. I'm your host, Karla, and with me is my fellow co-host and CMT, David Blake. It's Monday, August 19th, 2024, and it was an exciting week in the stock market last week, and we have some important things to look at moving forward. We do it mostly from a technical perspective. David, I hope that you had a great weekend. How are you doing today?
I'm doing well, thank you.
Great. Well, let's get started by taking a look at last week's market activity.
Okay, well, last week we continued to bounce back from that overdone reaction where we had the July jobs report came in, a little bit hotter than we wanted to see it. And also the Japan yen carry trade, which that lasted about a day or two, where we had that big drop in the market. Now, however, it did set us up for probably our A, B, and C cycle. That means that we probably made the low. Talk about that in a minute. But anyway, we had a pretty good week. We had lower than expected producer price index and consumer price index. So inflation continues to nudge a little bit lower. We also had some strong earnings from Walmart, Deere Co, Cisco Systems. So a nice variety of companies reported better than expected. And they also gave some nice guidance going forward. And probably one of the best things that go along with the PPI and the CPI was a jump in July retail sales. They were up 1%. The market was looking for up 0.3%. And then we had the first uptick in consumer sentiment in 5 months. So that was cheered by investors. And we had a pretty nice rally in the major indexes off of that. Okay, the rally was across the board. It was a risk on. We have great earnings, inflation coming down, talk about a rate cuts. So that's going risk on. The biggest gainers last week were technology, consumer discretionary, and then financial materials and industrial also led the events. So every sector was positive. So that was a good thing. Yields were a little changed, nothing big. They did go down, I think, on Tuesday or Wednesday. Then they kind of drifted a little bit higher the weekend, and the 10-year Treasury closed at 388. I think today we are at, as we're doing this, 386. So nothing big. 2-year notes staying above 4%. Not a big deal. We're seeing a little bit of movement, not much at all. Part of that is we've had several Fed officials, in fact, 2 today, said that they think it's time for the Federal Reserve to loosen policy a little bit, and that they don't want to be too late in cutting rates. So again, they're signaling that September rate cut is on the books, will be on the books going forward. The CME Group FedWatch now projects a 100% probability of a September rate cut. But right now, it's about a 77% probability there's going to be a quarter of a point. Some people are calling for a half a point because they wanted to see a quarter point in July too. But I don't think. I mean, the economy is still rolling along here pretty healthy. The consumer is still solid. So I think that a half a point may be overdoing it, and the market may say, why are they going a half point? But they may start to read into that maybe things are a little bit weaker than we anticipate. And that in turn, with rate cut coming up and then inflation coming down, we're getting more and more talk about soft landing. That's starting to gain more momentum. It would be not a miracle, but it'd be quite a feat for Powell to actually pull that off. It's not something that's easy to do by any means, but I think because of the consumer strength in that, I think that they have a good shot of doing that. Now, one thing is kind of interesting to see 2 commodities going in different directions. We're seeing crude oil prices moving a little bit lower. Part of that is because China still cannot get going. We're seeing less demand. You're seeing, because of policy over there, you're seeing net outflows of money out of their stock market. That's something you rarely see in a country. So that's something that, again, is meaning that the Chinese economy is not gaining strength. In fact, the demand concerns right now out of China, and that's one of the reasons why crude oil prices are still remaining low. Plus, you have on top of that, you have hopes for that the ceasefire talks in the Middle East will start to gain some momentum. We had gold setting a new record on Friday. It's up here, but I think it was a 25.44. That was an ounce. That's strong. As rates go down, the gold miners and stuff look fairly healthy in here.
Okay, and how is the technical condition of the market doing?
The technical condition of the market did improve last week. Major averages regained upside momentum. We're back above key moving average resistance levels. In fact, with today, we're getting a little bit of a bounce even further And right now, the S&P 500 and the NASDAQ are both counting today, will be on an 8-day winning streak, which is, that's also fairly rare. So people are jumping in there. The fact that if we are in for a soft landing, that's pretty big. Today, we're also seeing the Russell 2000 outperform. There was some talk that maybe the small cap trade was dead. It's not dead yet. You can still be going. I wouldn't throw everything into it, but I do think that small caps they're cheap right now, and I think that you can probably siphon off some of your funds and go in small caps just to diversify your portfolio a little bit. So that was good. One of the other things we saw last week was semiconductors bouncing back. The Philadelphia Semiconductor Index surged 9.8% on the week. It did cross back above its 100-day moving average, but it's still slightly below the 50-day moving average. You want to watch that. That would be resistance on the Philadelphia Semi Index at around 53.5 to 53.10, something like that. You kind of keep an eye on that. If it can bust through that's probably a good thing for tech trade going forward also. Underlying breadth was mostly positive last week. Good sign. We talk about the NYSE advanced decline line as a leading indicator of market direction, and NYSE AD line made several new highs last week. That pretty much confirms that the lows were probably in and we're going to move higher from here. So that's good. New 52-week highs also outdid the new lows on the NYC. Not quite on the NASDAQ, but that's not as important. But we did see the new highs expanding. I did want to mention one thing, that today, if you look at the new highs, and we have about highs on the NASDAQ are about 3 to 1. What's nice is the new highs aren't including Google and Microsoft and Apple and these kind of stocks. We're seeing financials, we're seeing some REITs, we're seeing a broadening out of what stocks are making new highs. And that's, again, a good sign. That shows that we're getting more cyclical stocks involved in this rally. It's not just the Magnificent Seven. And as long as that keeps going on, that's positive for the market going forward. That's just showing that more and more stocks are under accumulation. That's what you want to see with the rally.
And how are we looking for investor sentiment?
As far as sentiment goes, we actually it's a good sign when you start to see bullish sentiment come back towards the middle. When everybody's on one side of the trade, everybody thinks we're going to the moon with the market. That's usually a bad thing, because who's left to jump in to propel the market higher? If everybody is bullish on the market, it means they're probably almost fully invested, and they're not going to, who's going to be buying to move the market higher. Didn't mention last week that with that, yen trade and the jobs report that knocked the market down, knocked the NASDAQ into correction territory. We saw the hedge funds and the investment managers really kind of dump some stocks. They sold down to 56.6% exposure to equities. That's the lowest they've been in, I don't know. That's coming off just 3 weeks ago, where they were actually at one of the highest they had been since late 2020. So good things there. I think you're going to see, they need to get back into the market. They're always performance driven. And if this market's going higher, they've got to jump back in, which means there should be a lot more money coming into this market. I don't know that you'll see it all this week, but some things coming down the pike here that we'll see. We should probably get some more good news on the market that will make them want to go higher. Okay, as far as this next week or this week comes up, we have the FOMC meeting minutes on Wednesday. Again, we just want to see that everybody's on board on the committee that rates need to be cut. And then on Thursday, you'll probably see the market move a little bit. We have Fed Chair Jerome Powell is actually going to give his speech on the economy and policy. That's going to be watched by the market all day long, so we'll see how that goes. And then the rest of the week, not a lot of economic data coming out. We did see online retail sales come out today. They were strong. I think they were up 1.3% for the quarter, which is just a little bit below the 1.6 for the first quarter, but still showing the consumer is healthy. And also we're going to get several retail companies reporting earnings. I know Target's going to be out this week. TJ Maxx and a couple of the brick and mortar stocks also will be coming out with earnings, and that again that should confirm the fact that the consumers are in pretty good shape. And as long as they're in good shape, and you got rate cuts coming down the pike also, it's a recipe for a pretty good market over the next couple of weeks.
Okay, well, that's definitely helpful to know. I just had a question, I guess. Seems like the technical condition improved quite a bit, but we still have a negative CTI and bearish posture. What would it take for the posture to turn neutral or even bullish and for the CTI to
Okay.
to positive configuration?
Well, actually, we will be actually. You probably reset cycles A, B, and C last week, which should lead to a pretty healthy market going forward. That was the B cycle was 18 weeks. The C cycle was a 36 week. The last bottomed out previous October, I think, something like that. So we'll be, unless something drastic happens where the market goes down, 7 or 8%. That week, the lows from the previous, not last week, but the week before that, are in. We got confirmation from the 20-day FLD, which is forward line of demarcation, that when the price went above, cracked through that last week, that was actually confirmation that the low was probably in. So we actually should be positive this week, bullish, and that'll be changed unless something drastic happens. We'll be bullish by Friday.
Okay, well, that's very helpful to know. And I think that was actually my last question. Is there anything else that you'd like to add moving forward, David?
No, I don't think so. Like I said, I expect a kind of a wishy-washy market for the first couple of days. I don't think, if there for some reason we got a little bit of some bearish comments in the FOMC meeting minutes, you might see a little bit of a pullback, but I don't expect that at all. And then I would imagine Fed Chair Powell is going to be fairly dovish on rates and what's going on with the economy. I think he sees thing. The only thing that would maybe make him be a little bit hesitant is the Federal Reserve wants to definitely appear to be non-political. And just the fact that they're cutting rates into an election does have a few people concerned, but I wouldn't worry about that, especially with a quarter point cut. I mean, that's not something that's everyone's going to go out and start refinancing their houses on a quarter point. So go with what he has to say. I think it's going to be, positive comments for that. But up until towards the end of the week, I don't expect much action in the market going forward. Like I said, there really isn't anything coming out on the economic reports. You'll get mortgage apps coming out on Wednesday, and that's probably just about it. Then we'll also watch on Thursday the jobless claims and existing home sales. But other than that, I think I start for the next couple of days, just kind of drift a little higher, and maybe we get a good boost after Powell speaks. We'll have to see.
All right. Well, nice and short and sweet for this week, but lots of information to know. David, I just wanted to thank you again for all the helpful information. We'll wrap up this week's Tech Talk Tuesday, but we'll catch you guys again next week.
That sounds good.